Successful investing is about identifying trends before they emerge and finding changes that bring new winners to market. And this panel is exactly going to do that. Hi, everyone. A very good evening. I'm Diksha Gera, and I lead payments and fintech coverage for Bloomberg Intelligence. We are the in-house equity research, credit research, investment research team within Bloomberg. And I am super excited to have an amazing set of panelists with me today. Please join me in welcoming Paul Eitelman, who's the Global Chief Strategist at Russell Investments, Leigh Marie Braswell, who's a partner at Kleiner Perkins, and Vibhor Rastogi, who heads AI investing at Citi Ventures. So, believe it or not, but we're almost at the tail end of the first half of the year. That realization happened this morning when I was writing this note. Markets in 2024 were solid. Large cap US companies did really well. This area particularly was very happy because a lot of that was driven by tech and AI related investments. This year, on the other hand, has been a bit of a roller coaster ride. Wouldn't we agree with that? I know Sarah and Kara talked about how global equities are kind of coming back up, and they've recovered to the most part, but the strategy team at BI actually thinks that the whole Taco trade, which is Trump will actually chicken out, may be overheating. And as if the macro drama wasn't enough, we had DeepSeek put the whole AI hype to test. So we have a lot to unpack, and I have the perfect panel of a mix of public and private investment experts to do that today. So fasten your seatbelts, and as the saying goes, you snooze, you lose. So let's start with the macro and liquidity. Paul, let me bring you in on this. A lot of moving parts to the picture. Could you elaborate on the economic signals and data points that you're paying a lot more closer attention to as we head deeper into 2025?
Well, yeah, I mean, this has been a complicated picture, as Sarah was talking about. We had the big tariff shock in April. That caused a market collapse in confidence. What I've been encouraged by is when you look at what consumers and businesses are actually doing, they're still engaging in the real economy and spending. The growth isn't boomy, but it's holding in, and I think that resilience is really encouraging to see. As we look at really high-frequency measures of credit card spending data, which we have access to through late May, that's a picture where we're still seeing the consumer engage here. Markets have rebounded substantially off of those lows in early April as well, and I think that positivity in markets actually offers sort of a self-reinforcing positive dynamic back onto fundamentals as well. If you're thinking about that wealth effect onto the high-end consumer, it's very likely that they'll keep engaging here going forward. The labor market looks like it's kind of still chugging along here and showing resilience. So it's certainly a volatile and uncertain picture, but our view and baseline is that the U.S. economy can kind of chug through this challenging period and deliver maybe slower but still positive growth in the year ahead.
So, Vibhor, let me take a cue from that. And Paul, I'm with you. Like, we monitor payments data day in, day out, part of the job, of course, right? And that resilience has been encouraging. But when you look at liquidity trends in particular, right, for the private equity and the venture world, that has been complicated by these macro factors, right? Exit environment has been tricky. We've seen a lot more basically, that has led to distribution rates being reduced on capital returns to LPs. That has put pressure on GPs to find alternative ways for liquidity solutions. So, and funnily, when you contrast this with the massive dry powder that we started the year with, how are you evaluating those liquidity trends, and like, where do we head from here, in your view?
Yeah, I think it's a picture of many different worlds when it comes to liquidity. So if you think about the M&A market, which for VCs and private investor ends up being about 90% of where we get our liquidity from. So the M&A market, it was very subdued over the last 4 years. I wouldn't get into the politics of it, but FTC and Lina Khan were a large part of a lot of very, very antitrust enforcement. So in Q1, we saw almost 70 billion plus of M&A transactions that happened. You had the blockbuster Google Wiz deal. You had the ServiceNow MoveWorks deal that was about 3 billion. Salesforce just acquired Informatica for about 8 billion. And even though Informatica does not look like an AI candidate, you know, they're pole position in the data infrastructure, it is actually an AI acquisition. It allows Salesforce to go deeper with their agent force. So I think on the M&A side, we ourselves had some liquidity through M&A last year. Then when it comes to IPOs, that has probably been the weakest part of the liquidity story. We only had 8 IPOs in Q1. CoreWeave has done well after IPO, so that obviously bodes well. CoreWeave's up almost 200% since they went public. Chime will list next week, so we will see how well that does. I mean, it has priced below the last private round, which I think is an adjustment that a lot of private investors are having to make. And that has primarily held up liquidity going public because you have to adjust to that. And then I think a lot of the names that public investors want to own, the Stripes and the Databricks, they have been doing very large tender offers. Databricks did a $10 billion tender offer in December. So that has delayed their liquidity. And these names, if they come to market, I'm sure Sarah and Paul would love to have their investors own them. The growth that they're driving in private markets, public investors would like to benefit from their growth. So I think, M&A should continue. Strategics are back in the market. IPO, hopefully, as more IPOs price well, that should start to open up. And then and at some point when Anthropic and OpenAI, these names start to come to the public market, that should hopefully open up floodgates.
We moved the conversation from doom and gloom to Anthropic's IPO so conveniently, right?
Yes, it is, and yeah, I mean, Anthropic, I don't know if people are following the numbers. The company did $1 billion in revenue as of January. In May, they're already doing $3 billion in revenue. So the scale at which these companies are growing, I don't think we have ever seen in private markets growth like this. OpenAI finished the last year at $4 billion in revenue. They're forecasting $12 billion in revenue this year. These are massive, and these are 2-year-old companies, right? So just massive, massive growth. We can go to Cursor, Lovable. I mean, it's just amazing, the growth.
Hold that thought there. I knew this conversation was going to go into AI. I just did not anticipate it happen that quickly. Let me stay back on the more macro and the broader picture still. So let's take an audience poll here. How many of you think we are headed into a recession in the second half in the US? One hand.
Wow.
That is Silicon Valley for you. So, Paul, assuming the whole conversation around tariff kind of takes a backseat, where do you see markets will move? Like, where will the attention divert to?
Well, I think the big secular growth opportunity underneath the market for the past couple of years has been artificial intelligence. So if the noise out of Washington, D.C. settles down, I think we refocus back there again. And there's a lot of interesting questions. What does DeepSeek mean onto chip demand? How consequential is this new technology going to be over the long term? I think we're still trying to figure that out. With my economist hat on, the way we tend to approach new technologies is to think about how many workers can the technology impact, and then just how big of a productivity boost can it give those workers. I'd say around the breadth of the impact across the labor market, that looks very large in my mind, particularly with the advent of the chat features on the large language models. That's really democratized the new technology where users with really high-end technical expertise and those without can benefit from these really new, fascinating tools. On the productivity side, I think that's maybe a little bit more to be determined, where we've seen the early gains on adoption around areas like computer programming. I think there's some promising signs that there are very substantial productivity gains in some segments of the labor market, but we'll kind of have to wait and see as the technology continues to kind of mature and improve going forward. And if you kind of look over the horizon a little bit, maybe 5 to 10 years forward, and we can actually achieve something like artificial general intelligence, AGI, that starts to get kind of weird and fascinating around just how transformative an impact that could have on the U.S. labor market over the medium and longer term.
I think a lot of questions yet to be answered, right? Just impact on labor. And we'll go to a little bit more depth around that. But Leigh Marie, let's hear from you. Like, what are some of the opportunities that you are eyeing and you're seeing both in the portfolio and outside right now?
It's a really exciting time to be an investor in private companies across stages. So we're looking at, companies from the very earliest stage, seed stage, to, later stage private companies. we're seeing just a ton of opportunity. I mean, I think it's very clear just how ubiquitous consumer usage of AI is. Like, everyone knows what ChatGPT is in just an incredibly fast amount of time. But I think when it comes to the enterprise, or when it comes to, industries that are less likely to adopt software, so think healthcare, think legal, think finance, it's going to take a long time for, even if the models were to just remain as intelligent as they are now, which they won't, it's going to take a long time for that sort of full power to be realized in those segments in particular. So, at Kleiner Perkins, we're investing across many different applications. We have portfolio companies like Glean, which is helping enterprises do knowledge discovery, like Windsurf, which is helping programmers code much faster, like Ambience, which is a sort of an automated medical scribe for doctors. And so, investing a ton at the application layer, have a few investments too, kind of in infrastructure as well, but we're just seeing a ton of opportunity for these models to go in and really assist people inside of each domain, and even now with the sort of more agentic type features, automating work.
Absolutely. So I think we started with a lot of focus on the NVIDIAs of the world as to what AI infrastructure means. And we'll figure out more ways to kind of monetize that entire theme. But more on the early stages side of things, you're looking at more application-based features, right, within various use cases that LLMs are being applied to. Vibhor, financial services, and this topic is very close to heart because we do this day in, day out. Like, what are the biggest unlocks, or what are the biggest opportunities within financial services that AI will deliver?
Yeah, and so we are looking at it both from a horizontal point of view and a vertical point of view. So from a horizontal layer, similar to what Leigh Marie was saying, we have investments in legal, in search and summarization. We are investors in Glean as well. We are investors in a company, legal AI company, Lexion, that we exited to DocuSign last year. We are investors in a reg compliance company, Norm. So it's the horizontal layer that's not industry specific, but it is driving productivity throughout the enterprise. And then we are looking at vertical specific companies, so companies in the wealth space, companies in payments and agentic commerce and areas like those. So we see AI opportunities across both those continuum.
Yes, absolutely. I think from our vantage point as well, this is one observation that we've had. There's a lot more focus on productivity benefits as opposed to, say, an autonomous bank that will run by itself. Like, it's easier for you to kind of have a taxi ride, which is completely autonomous. And I know, like, the Bay Area will completely relate with what I'm talking about. We use Waymo day in, day out here. But just the thought of someone just automatically dealing with my money with no, in a better way to say, there is a better way to say that, but I will just say it as is, no neck to choke if something goes wrong, right? So I think that's one reason why we're probably going to see the whole play of AI within financial services in a slightly different format that we've seen with other industries.
Yeah, I mean, just to pick on that just very quickly, the shortest startup meeting I had is this one founder that wants to do wires automatically, where an email comes in with wire instructions and the bank sends out the wires autonomously. So I think, we are a long way away from, treasury and control functions letting go of those approvals.
Absolutely. I think it's time to address the elephant in the room, the AI bubble. Let's do an audience poll. I think we have a fairly involved and engaged audience. How many people here think we are in an AI bubble? That is amazing. I totally didn't expect those many hands, to be honest, but thank you. So that is a valid question in that case, right? Paul, let me come back to you. And by the way, when I was talking to Vibhor about this, he told me his car has a bumper that says, "God, give me one more bubble." Like, that's so that's Silicon Valley again. But Paul, do you think there has been an overinvestment in AI compared, say, to the dot-com bubble? And how are you looking at it? How are you thinking about it?
There's certainly a lot of excitement in AI. I wouldn't say we see clear evidence of overinvestment, though, and it's quite different from the dot-com period. The way you tend to think about that from a macro perspective, there's an indicator called the corporate financing gap, and in the aggregate, what we look at is how much CapEx is being put forward in the economy, relative or scaled by free cash flow in the corporate sector. So what you have right now is a lot of CapEx, so again, excitement, but also a lot of free cash flow and fundamentals behind that CapEx. That's very different from the late 90s, where you had a lot of CapEx but very little free cash flow. So I'd say this current period, yes, excitement, yes, a lot of investment, but it's sort of a safer, less imbalanced kind of investment than what we were seeing 25 years ago in the United States, and that likely offers a little bit more resilience. It's certainly the case that you could have failed investments or weak ROI on certain projects or for certain companies trying to deploy this new technology, but at least from a top-down perspective, this doesn't look like a sort of grossly imbalanced bubble from an investment.
A lot more sanguine view here. Thank you so much for that. Leigh Marie, how is AI investing different from the cloud era?
Absolutely. And one thing I'll also say is, when people ask about a bubble or something like that, I'm absolutely confident that if you're not making investments right now, you're going to miss history-making companies. That is just abundantly clear. And I mean, we're in the middle of a paradigm shift, and we've got this intelligence, and it's going to sort of horizontally go across all industries, all users. But it is somewhat unpredictable. Like, I think, you talk to technology experts, which is something that I'm doing sort of day in and day out, and they will disagree. Like, when are the models going to get that much better, that much more reliable? It's just a bit unpredictable, kind of unlike the cloud era, where it seemed a bit more predictable about how things were going to play out. And then, as you were saying, there's just this giant, capital intensity of building these models, even with the new techniques and things like that. So certainly a really exciting time,
Absolutely.
But yeah, hard to predict a lot of things.
I mean, the uncertainty is what makes it more exciting and, again, more gigantic in a way as well, right? Like, you don't know how far along are you by the time you figure out that's not the right pathway in a way. What criteria do you use, Vibhor, when you're looking at AI-first startups? Like, how do you distinguish between what is an AI versus what is for a feminine term, an AI lipstick?
Yeah, AI washing. No, I think for us, it's very fundamentally, why do you need AI to do that particular job, right? So there's a lot of hammers looking for nails. You have agents for this, AI for this. But why does this problem fundamentally benefit from if you were going to use a large language model? And, for us, it comes down to, is there a large corpus of curated, unstructured data? I mean, that is the fuel. That is a minimum requirement. So, when we invested in Lexi on the legal AI company, when they bootstrapped the company by training their large language models on tens of thousands of contracts, which Wilson Sonsini, their seed investor, gave to them. And that was the fundamental, set of document. And then as they started getting into customers, they were fine-tuning their models with the customer data, with customer permission. And that's how their models kept getting better and better. And that is work that you could not have done when a general counsel sits in the software and the software is recommending which clauses to accept, which clauses to reject, how do you redline, and makes the GC 5-10 times more efficient. You could not have done it without these foundational models. Or a company like Glean, which Kleiner and us are both invested in, in the previous era where you were just searching for information and you got a bunch of links. And we are very used to that experience now in the consumer world. But in the enterprise world, it is still a very broken search experience. So not only are you getting the relevant information, it's neatly summarized for you. You're about to go into a sales meeting, meet a customer. Every interaction with the customer is neatly summarized, an account dossier. Pankaj and I used to work at Intel, and there used to be teams that are pulling together those briefing documents for executives, and those are all pulled together by this. So again, you could not have done this without AI and AI-first companies. So we look for, that's really what it comes down to for us, is why do you need AI? Does it have the right amount of data for AI models to work well? And will those add 10x more productivity to the user who's going to use the product?
Understood. I think so. Proprietary data definitely is something that you're watching for identifying winners in the new AI regime. Actually, let's explore a little bit more on the whole monetization of this theme, right? Like, how do you play it? How do investors in the room play that theme? So, Paul, some would argue that the NVIDIA play on AI is kind of sort of done. What is the next leg of opportunities that you are looking at to play this theme and that are likely going to kind of unfold as we go?
Yeah, when we talk to our stock pickers and money managers about where they're seeing value in the broader AI theme, I think there's 3 areas that stand out. One is a transition away from hardware to software. So companies leaning on LLMs and deploying that in a way to add value for customers and to deliver faster sales. I think that's a key focus area and an area of opportunistic value here. Another one is sort of a transition away from the builders of AI to the users of AI, and sort of riffing off the points from just a moment ago. I mean, there's a lot of companies that have very large proprietary data sets that are investing in the technology now and can find differentiated insights and kind of get a leg up on their competition here. And that sort of spans, I think, the whole ecosystem. A lot of companies are trying really hard right now to kind of figure that process out. But I think there's potential for the benefits to broaden out here away from tech to the broader corporate space. And then third and finally, and I think this is probably a consensus view, but the energy and data center demands for AI are just really enormous. And that's having really important implications onto traditional sectors like utilities. They used to be pretty boring, but they now have this sort of secular growth kicker behind them that's making them start to trade differently than decades past. And infrastructure is, I think, another related play in that similar space. So I think those are kind of the 3 focus areas or transition points that we're highlighting.
Gosh, if AI can make energy interesting, then I don't know what all it can do. So let's explore a little bit around the whole agentic AI space. Leigh Marie, we were talking about that. What use cases are you seeing getting unlocked, and like where do you see VR in terms of identifying product market fit in that space?
Absolutely. So I think maybe about a year ago, there was a lot of noise and ruckus around, agents are here, you're not going to be able to program anymore. It's going to take your job, sort of thing. And, it was just not true. You saw some amazing demos, but, when you think about what's actually valuable today, it's companies like those that are starting with assisting programmers and then now moving into doing more and more into in-task. And so, for example, I'm on the board of this company, Windsurf. At this point, I think it's a no-brainer if you're a programmer to use something like a Windsurf to assist you. And basically what a Windsurf does is I'm coding and it will offer me suggestions, and I can speed up as a result. And so, programmers are seeing themselves become 40, 50% faster using something like this. And so, it's really surprised me that over the past, 2 or so years, the product has gotten so good that it can now take off, small, increasingly larger tasks from a programmer's workflow and do them fully autonomously.
Hold that thought on there. That really is scary, okay?
Yeah.
Like, how many of us have kids here who are graduating in the next 5, 7, 10 years? How many of you actually think they will need to know coding when they graduate? Raise your hand if you think they need to know coding when they graduate. Because what, Leigh Marie, you just said, like, I'm just wondering, will it even be important for them to know coding as opposed to just sit there and do prompt engineering with AI? My 13-year-old literally did that. Like, she's trying to learn code, and then I saw her ChatGPT history, and she's basically just throwing in code lines and asking it to solve, like, troubleshoot the whole thing for her. So how do you see that unfold?
Yeah, so certainly today, you certainly, to build anything more than kind of a simple app, you need some amount of programming expertise. But however, some non-technical people have gotten really good at building simple things quite quickly. I kind of think of it like, even today, if you're like studying to become a software engineer, you're taking classes in college that you're not going to use on the job, like compilers or like certain types of algorithms classes. You're just not going to use them on the job. And so as we move up to this high level abstraction of English can do more and more for me, I don't need to know syntax, there are still benefits to knowing, the sort of the syntax, the programming fundamentals, even if you're not using them as much in your day-to-day. And I think ultimately, if we're in a world even where, coding, the autonomous systems are doing most of the coding for us, the best programmers are still going to really understand how to, intervene in the very sort of increasingly smaller opportunities that they have to.
Absolutely. I mean, that notion itself is very scary, but yeah, I completely hear your point, like structured thought process, problem solving, all those kind of skills that you build alongside your education is kind of where we are headed to, and programming is just like one manifestation of how that'll kind of play out. Vibhor, we were talking about agentic AI. Clearly, like I saw the product demos from Visa and PayPal was doing work around that as well. It's almost eerie. Like I'm very comfortable with someone coming and recommending a dress to me, or like telling me what will look good, or giving me recommendations on shopping. But when it comes to going and actually spending my money, it was scary for me. Like Waymo is not scary, but someone spending my money is scary for me. So tell me, like, where are we? Where is agentic AI, and how is it going to be different from the traditional, like, process automation that we've seen so far?
Yeah, I think agent washing, similar to AI washing. I mean, there's a lot of that as well. And I think, one of the things I read, the other day was your APIs and your workflows are not agents, right? So I think there's a lot of confusion what agentic actually is. And for me, it fundamentally boils down to, are these planning, reasoning agents, right? So as humans, we do a lot of our cognitive work is under a lot of uncertainty. There's a lot of human decision making. I think Sarah was talking about how the two jobs that will never get replaced, asset managers and VCs, because a lot of our work does involve a lot of cognitive human decision making. And that's ultimately what these agents need to become by using the reasoning capabilities. A lot of newer models have been trained on reinforcement learning algorithms, based on the same techniques that were used for AlphaZero and other models that have, become really, really good at figuring out in a probable state space what are all the possible permutation combinations, and then figuring their way out of a problem. And so if an agentic technology exhibits those behaviors and can truly move the needle on human productivity, then that's like truly breakthrough. But if you just took a workflow and coded it in a very deterministic way, I think that's just AI agent washing existing products.
So in a nutshell, what Vibhor is saying, that as soon as AI starts doing your job, thinking through uncertainty, dealing with all of that, that's where we are kind of...
Yeah, but not VCs. Like VCs are safe.
Sounds good. I think we're pretty much at time. There was some other stuff that we were going to talk, but please connect with us off stage. And thank you so much for all the amazing insights. Really enjoyed having this conversation.